So midnight open is pretty much the high of that new day opening gap right there. So right now we're trading at a discount in comparison to where we opened at midnight. We also gapped down. Okay, so we opened lower than where we closed with yesterday's trading using regular trading hours. So we opened at a discount as well. So I'm going to see that as retail is chasing us lower, because this is what retail sees. Retail sees us selling off, lower prices. Then we opened today at 9:30, gap lower. So retail is going to be quick to chase this thing going lower. We do have equal lows down here. We could sweep that, trade into the new day opening gap, and possibly work our way higher. But right now, I'm seeing this as retail is trailing all of this. They're chasing all this price action going lower. And we're already below that midnight open. We're already in a deep discount. So I would like to see some sort of setup to go long, preferably. So implied fair value gaps is real simple. Whenever you have a candle like this here, and you have wicks on both sides of the candle, okay, if you remember, ICT teaches wicks are gaps, okay? So this is what I did. I take the consequent encroachment of this wick here on the left side of this candle, get consequent encroachment of that wick. On the right side of this candle, get consequent encroachment of this wick. Okay, so that's the two blue lines you see. The consequent encroachment of this wick here and the consequent encroachment of this wick here. You take the range between those two, you treat that as a normal fair value gap. And it's an implied fair value gap because it's not your traditional fair value gap, it's implied, okay? So that right there is your implied fair value gap. That's what I had on my chart. And then, just like a regular fair value gap, you need the consequent encroachment, the midpoint. So you take this level here, get the midpoint. Boom. That's what you see putting on my chart here. And I have it labeled daily implied BISI, because this is a buy side imbalance, sell side inefficiency, just like if this was a regular fair value gap. Okay, daily implied BISI consequent encroachment. That's what you see me label here. Daily implied BISI high, because this is the high of this implied fair value gap. Daily implied BISI low, which is the low. So that's all it is. And then if you drop down to a 5-minute chart, nobody else sees this. Nobody on stream, on YouTube, nobody else has this on the chart. They're missing out on this level of precision. We take out sell side. I already said we're in a deep discount way below that midnight open. Retail is chasing this thing going lower. They want to see lower prices. If you turn on regular trading hours, we gap lower at the open. Retail's quick to chase this. We're only going lower to clear the sell side. And you can see the bodies on the 5-minute chart beautifully respecting the consequent encroachment of that implied fair value gap. Once I see this, and then we get this candle here, I immediately drop down to a 1-minute chart. All right. I said I want to see this fair value gap act as a breakaway gap. Don't want to see that traded to. And once I see us form a fair value gap, for those who have been in the stream for a while, you know my favorite setups to take are fair value gaps that are in close proximity to a new day opening gap. We talked about that in the webinar a couple of weeks ago. So we drop down into this small little fair value gap here, but look at that new day opening gap offering support. Beautiful. We rally. So entering long here, targeting this up here. It didn't get it, but took a partial, made a little piece of change on my personal account. So I'll take that for a Friday.